the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a super cycle. If Ethereum's price ratio recovers to its all-time high against Bitcoin, then Ethereum will outperform Bitcoin by 5 times. Okay, meaning if Bitcoin goes to 1 million, and that's 10 times from here, that means Ethereum could go up 50 times.
Wow. Tom Lee begins by reaffirming his long-standing stance on Bitcoin. In his words, Bitcoin is the ideal store of value, the digital equivalent of gold. It is decentralized, scarce, and widely recognized as the foundation of the crypto asset class. For investors, Bitcoin remains indispensable. If Bitcoin climbs from today's levels toward $1 million per coin, that's roughly a 10x return. And for companies like MicroStrategy, which hold Bitcoin on their balance sheets, the upside could be even larger.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
I still like Bitcoin, and we still recommend it to clients because Bitcoin is, I think, a ideal store of value. So it's digital gold. But in 2025, there is a much bigger transformation underway because the White House has really pushed 2 different agendas. The first is the Genius Act, and that's to essentially greenlight stablecoins. And stablecoins are going to grow dramatically. Today, there's about $280 billion of stablecoins outstanding. Treasury Secretary Bessent thinks it's going to get to close to $4 trillion.
Yeah, he is.
So that's exponential growth. And then there's the SEC's Project Crypto, which is encouraging not only for Wall Street to look at digital assets, but to rebuild Wall Street onto the blockchain. Okay. So this is a dramatic moment where the financial system is essentially moving everything onto a digital platform. The platform that you need, the blockchain, a public chain, needs to be one that has smart contracts. So it's not going to be built on Bitcoin. Wall Street is choosing to do this on Ethereum. So Ethereum is facing a moment that what we call a super cycle, similar to what happened in 1971 when the US dollar went off the gold standard. And that moment is when Wall Street innovated financial products because the dollar became synthetic in 1971. But in 2025, it's now Wall Street essentially digitizing or tokenizing the real world. So Ethereum is unique because, number one, it's the blockchain of choice where Wall Street is building stablecoins and tokenized assets. But Ethereum is a proof of stake blockchain. Well, if someone's buying MicroStrategy, they're buying it for their Bitcoin exposure. And let's say that Bitcoin can go from 100,000 to 1 million, so 10 times. MicroStrategy will go up more than that because of its Bitcoin strategy. But Ethereum today is 4,000 roughly. We show that if Ethereum's price ratio recovers to its all-time high against Bitcoin, then Ethereum will outperform Bitcoin by 5 times. Okay, meaning if Bitcoin goes to 1 million, and that's 10 times from here, that means Ethereum could go up 50 times.
Wow.
So now Bitmine stock should outperform Ethereum's price move. So if MicroStrategy will outperform a 10 times rise in Bitcoin, Bitmine will outperform a 50 times rise in Ethereum. So in a way, and these are the 2 largest crypto treasuries in the world.
Yeah, it is.
The choice is really understanding that Ethereum is facing a positive innovation cycle that markets haven't yet recognized because it's been for 5 years. It's been a chain that's been slowly improving, but now this is the moment. So my friends that are in the financial business, they are the ones who missed Bitcoin, because in 2017, their knowledge of the world is traditional stocks, traditional bonds. They didn't think crypto made any sense at all. So they were very skeptical of Bitcoin. And in fact, many ridiculed my views about it. Of course, now they acknowledge it was a great idea.
I think they'll regret it.
Yeah. But now when I tell my friends about Ethereum, my close friends still do the same thing. They're like, Ethereum, it hasn't done anything for 5 years. Why would I buy Ethereum now? So my closest friends are still very skeptical. The stablecoin industry is the first really widely adopted crypto product. That's why we called it the ChatGPT moment. And stablecoins work really well. Merchants love it because they don't have what they call chargebacks, and the exchange fees are much lower. If a merchant accepts Visa payments, for instance, that's 2 to 3% of the charge is taken by Visa. And if there's a fraudulent charge, the merchant is forced to lose money on that transaction. There's never any fraud on a stablecoin because it's a bearer instrument. Consumers like stablecoins because it's less expensive to carry a USDC than to have a bank account. And then the stablecoin issuer makes money on a stablecoin. Stablecoins also are big owners of U.S. Treasuries. In fact, collectively, they're the 12th largest holder of U.S. Treasuries. So it's a very good model for the United States. And I think banks have looked at stablecoins initially as, they didn't really like the product, but now that they've seen the adoption, they've become interested in issuing their own stablecoins.
Owning Bitmine stock is not the same as owning Ethereum directly. It's potentially more powerful. The company structure allows it to grow the Ethereum held per share, which amplifies investor returns. Lee also emphasizes that Bitmine has a clean balance sheet, no debt, no convertibles, no preferred shares. That makes it resilient in downturns, just like MicroStrategy. In a crypto winter, companies with strong balance sheets and scale survive, much like the Magnificent Seven tech stocks did in equities.
The stablecoin market's going to get competitive. So Circle is the biggest stablecoin after Tether. I don't really know the financials of Circle that closely. So if someone is interested in owning that stock, I don't know. But stablecoins have to run on a blockchain. Right? So Tether, USDT and USDC, they operate on top of an existing blockchain. And the majority of stablecoins, over 60%, are operated on Ethereum. So Ethereum is where most of the stablecoins are actually operating. And 36% of the fees for Ethereum today come from stablecoins. And
that's a lot.
There's a stat that was just published over the weekend, but in just the last 7 days, about 7 billion of stablecoins were created on Ethereum, which is greater than the amount of stablecoins on Solana over the past 5 years. So more stablecoins creations are taking place on Ethereum. So I'd say if you're betting on stablecoins, you should bet on Ethereum.
Yeah, it's like betting on Ethereum. Okay.
Yeah, and that's just tokenizing the dollar. Wall Street wants to tokenize the stock market, and they want to tokenize bonds and real estate and even art. That tokenizing mechanism is the same essentially as tokenizing a dollar. So that's where Wall Street is, again, doing most of that work on Ethereum. As you know, there's 53 Bitcoin treasury companies, and there's probably 70 or 80 globally crypto treasury companies. So there's a lot of companies. And a downturn in prices is something that we should all expect to happen. If you look at the traditional stock market, because these are companies, there is what I call first principles. The first principle in a downturn is that the company that survives has the cleanest balance sheet. So Bitmine has no debt. It has no convertibles, no preferred. It's just straight common stock. That is the cleanest structure to have in a downturn, because it's really the debt that creates the problems for a company when prices fall.
Oh.
And as many people know, the debt holders of a company have a competing motive versus the equity holders. The debt holders don't care about growth. They just want their money back. So as prices fall, the debt holders take a bigger part of the company. So you don't want to have debt if there's a downturn. The second is you don't want to be small, because the smaller companies lose their opportunity to finance themselves. So today, globally, Bitmine is the second largest crypto treasury in the world.
Yeah, it is.
Only second to MicroStrategy. So if there is a downturn of crypto prices, the top two companies are going to certainly survive. Just like when the S&P fell, the Mag 7 survived.
Yeah.
So MicroStrategy and Bitmine are like the Mag 7 of the crypto treasuries. You know, they both have very clean balance sheets. Ethereum can go up a lot. Why don't I just buy Ethereum? And one of the differences is that a digital treasury like Bitmine is actually growing how much Ethereum you have per share. So I'll give you an example. On July 8th, when we closed on that initial transaction for taking over Bitmine, or transforming it to a Bitmine treasury, an Ethereum treasury, there was $4 of Ethereum per share held at Bitmine. So imagine someone could say, I could buy $4 worth of Ethereum or buy one Bitmine share. As of August 24th, Bitmine held $40 of Ethereum per share. So it rose by 10 times. But if someone bought the Ethereum itself, or they bought the Ethereum ETF, they'd still only have $4 of Ethereum per share. So you can see that a treasury company is growing your Ethereum holdings per share. That's why MicroStrategy's stock did better than Bitcoin. In August 2020, MicroStrategy's stock was $13. Today it's $335. It's gone up by more than 25 times. The price of Bitcoin has gone from 10,000 to 110,000. So it's gone up by 11 times, but MicroStrategy stock's gone up by 25 times. And that's because MicroStrategy, as a treasury company, has grown your Bitcoin per share. And Bitmine is growing your Ethereum held per share every week. It's growing by roughly 50 cents per day.
The key insight is that the digital asset revolution is no longer just about speculation. It's about adoption, integration, and transformation of the financial system itself. Bitcoin remains essential, but Ethereum may offer even greater upside as Wall Street, stablecoins, and tokenization converge on its platform. As Tom Lee reminds us, skepticism often marks the best buying opportunities. In 2017, people laughed at Bitcoin. By 2025, many may regret laughing at Ethereum.